So good morning, everyone, and thank you for joining us. Welcome to our second webinar at Hagen Co in our Vision and Strategy series. And we are delighted and very proud to be collaborating with Jeremy Bowley of Insider Pro. So just before we get started, a few housekeeping points to make. Please feel free to ask a question at any time. In the Zoom webinar function, there is a tab at the bottom and a dedicated Q&A icon, so you can ask a question that'll label it your name, etc., and we can answer it at the end. Or if it's particularly urgent, you can raise your hand virtually and we'll try and answer on the fly as well. So let's kick off. Economic stress and recessions are times when a lot of the focus reverts as a knee-jerk straight back to cost management across a lot of sectors, a lot of businesses. Sales and marketing budgets are cut, business development strategies are moved down the pecking order, and many business leaders stick on their tin hats and hunker down, becoming very reactive, awaiting the storm to happen and to pass. But surely there are other proactive strategies that can actively help your business and not only survive, but thrive. So surely this is the time where your competitors may take the reactionary route and put their head down and their thumbs up. And surely this is the perfect point where you can advance and conquer. So we recently ran a poll on LinkedIn where we asked the community a question: what do you think will be the most important thing to think about if we face further uncertainty within the finance and accounting sphere? So we had protecting cash flow, furloughing staff, updating technology systems, and also crisis management strategy. So no surprise there, but the key winner was protecting cash flow at 57% of respondees. So given the context of the current climate and also today's webinar, it's reassuringly pertinent that the focus is very much on cash flow. But how about being able to increase cash flow as well as protecting it, right? So we're joined today by Jeremy, Managing Director of Insider Pro, who are a consulting firm in Leamington, who focus on uncovering hidden cash flow in your supply chain and ultimately driving investor value and an increase in multiples by delivering huge upside in enterprise value. So Jeremy and his team has worked with some global giants across multiple sectors and worked closely with a number of investors and PE firms to increase value in their portfolio also. And having been in touch with Jeremy over the last few weeks or so and looking at the content and the work they've done, the results that he and his team generate are absolutely mind-blowing, absolutely mind-blowing. So Jeremy, welcome and thank you so much for joining us. Over to you.
Thank you very much. Appreciate it. Yeah, I think, Damien, it's no surprise to me the results of your survey. It's certainly what I've seen in the businesses that we're talking to sort of during this period. And you know, by way of quick introduction, so I'm Jeremy Bowley. I specialise really in helping companies grow enterprise value, which in practical day-to-day terms means most of the time I'm working with financial controllers, finance directors, CFOs, CEOs, and investors really to help companies accelerate their cash flow. I think, and this is slightly embarrassing as always, over the last 20 or so years, I've probably worked with knocking on the door of 100 companies. I won't pretend to remember all the details of all of them now, but the vast majority of them have been in the UK, and pretty much all of them mid-cap growth businesses. There are some big ones in there too, a couple of FT 100s, but the vast majority of my experience is in that kind of mid-cap going somewhere organization, which I have to say is I really enjoy. In today's session, I really want to share with you what I've learned during that journey and the process that we've used to help those companies generate cash flow. Now, as a business owner, it's super tempting to kind of use these opportunities as a sales pitch. I'm not going to do that today. What I'm going to try to do today is share with you the principles that we've learned, some of the tools that we've got. I think we've got a tool as well that we can share sort of after, and we'll talk through a bit today, that you can use really practically to make a difference next week, next month, tomorrow, that will really help you set your company on a journey to generating more cash flow. And for some of you, you know, certainly £1 million in 90 days is absolutely achievable. It's very tempting in these sessions to think about, you know, does this really apply to me? And in that 100 or so companies, we've worked with companies who are 5 million turnover, 50 million turnover, and 500 million, and a couple in the billions. The principles apply to all types of business, whether you're an online business, whether you make stuff, whether you're on the high street. There should be no question that you should be able to take the content from today and actually apply it in any of those businesses, because the principles of operating those businesses and driving additional cash flow pretty much apply to everyone. I make absolutely no apologies for talking about money today. I have read a lot of the press stuff, seen a lot of stuff online, which is all very purpose-led and heartfelt. And look, and that's not lost on me, but and I'm super sympathetic to it. But I'm also a realist and a pragmatist. And I think, as you guys probably know, ignoring the need for cash is naive and foolhardy. It's naive and foolhardy at the best of times. So I do want to focus the conversation on what can we practically do to help our companies, not just, as Damien said, survive and contain the challenging circumstances right now, but really to thrive. And I think, you know, if you're thinking your organization is sitting on their hands, you know, now's not the time to be doing that. I'm sure you know that too, but I wanted to just reinforce that point. So I will be rather mercenary in talking about the sort of financial side of life today, but I think now is absolutely the time to be doing that. I will share a sort of softer point with you. I walked down the main street here today, where I live in Leamington, and I passed a whole bunch of sort of retail units and a couple of offices, which are closed, and it's pretty sad. Kind of lights out, cold, and I've no doubt that the pandemic's had an effect on those businesses. But I also know, and I do know the insides of a couple of these businesses, having sort of met with them before, that some of those organizations, it's down to procrastination and inaction, a failure to plan, a failure to get on with stuff, a failure to make tough decisions. So whilst the pandemic has had an effect on some of those businesses, I think it's probably magnified what's already there. I hate seeing the wasted potential. A lot of those businesses were doing some pretty cool stuff. They were employing people, they were vibrant places. But it's incumbent on those management teams to get ahead of the curve. And whilst no doubt for some of them, the pandemic has been, you know, very, very, very challenging, and you know, job losses are inevitable. We can certainly make a difference to reducing them, to creating some jobs. There are businesses and organizations that can thrive and still grow, certainly as the recovery kicks in. And I find it quite difficult to walk past all that kind of lost potential, you know, the human side of it, sort of consumer side of it as well. So that fires me up for my message today, to say, you know, whatever you do, please leave today with some, you know, we'll share some examples with you, some real belief that some of this stuff can be done, and it can be done right now, and you can make a real difference. Like I said, we'll share some tools with you, we'll share some stuff throughout today, which will be super practical. But, you know, and we'll keep it simple. So it will be stuff that you can do. I'd like to say sort of, you know, reality, you can do it without lots of investment and support. They are very, very simple, but hugely effective tools that you can use in your business tomorrow, which ultimately will end up with hopefully £1 million cash flow in 90 days, or whatever the right figure is for your scale of your business. Right, that's good news. The technology is working, so I'm quite happy with that. My clear message to you that I've learned over the last few years, and I've worked largely with PE-backed businesses, is that focused engineering of enterprise value, so thinking about enterprise value, doubles returns. Now, I'm no sort of salesman for private equity. It just is my experience. You know, PE, I'm sure you know, uses essentially 3 levers to drive enterprise value. Financial stuff, so funding, capital structure, the governance side of things, sort of management team, policy and compliance. And the third thing, operational engineering via the enterprise value equation. And you can see from the graph there, you know, PE outperforms the FT, no question about it, and time again. And I find that super exciting. So I think there's a lot of lessons that we can take from it. There are some things to loathe about PE, but I only want to talk about the third thing today, operational engineering. So if you've got any questions on financial or governance, Damien, you're more than welcome to take them. Personally, for me, I'm not an FD, I'm not financially qualified. I'm entirely the wrong person to ask about any items on 1 and 2. But in terms of item 3, that what can we do in our business today which will make a difference and will drive additional cash value and ultimately enterprise value. That's my thing. That's what I do, and that's what I will share with you today. So please be kind on the questions. Make them about 3, not 1 or 2. I'd appreciate that. So the next few minutes, we'll talk about focusing your company on enterprise value and the fact that when you do that, that leads to the additional cash flow. So it's not the focusing on the cash flow that makes a difference. It's the focusing on enterprise value, and the cash flow is a result. I'll share with you some results that businesses just like yours are seeing right now. I'll give you some actions that you can take to get a similar effect in your business. And then I'm super looking forward to a really good Q&A session. A little bit about background, so you kind of get my perspective on life. I left university, and like many people, had absolutely no idea what I wanted to do. I knew what I didn't want to do, and that was sales. I didn't want to sell photocopiers. I didn't want to sell fax machines. Maybe to Messi would have been fine, but certainly that sort of business sort of terrified me, or groceries, or confectionery, or pet food, or any of those sorts of things. And I basically was trying to avoid driving a Rosso red Mondeo and becoming a sort of sales rep. So I thought, sort of, what could I do that isn't that? I couldn't do finance, to be quite honest. I can't compete with you guys on the maths, far too highbrow for me. And I don't think I really understood what HR was. And I thought everyone in IT was a bit nerdy, really. And, like I said, at the risk of offending people. And I had no idea that they would then take over the world. Which I guess, looking back on it, maybe I should have made a different decision. So I ended up in buying it at Severn Trent, FT100 company, and I can confidently say I hated every single second of it. The business was split into 2. We had what was called the sexy part, for those of you who know the business, where we sort of did water treatment, and the sort of sewage treatment part, or the poo crew, I think we called it in the early days, which was just not the right place to be operating. But what really killed me, and you can kind of see it in the graph bottom left there, was just the lack of ambition. I mean, on the front sign, it was moldy. They had a no entry sign essentially on your front door, and nothing says, let's not get anything done today, like putting a no entry sign on your front door. I think, culturally, we did little more than collect our paychecks and do the bare minimum. And I know you'll remember this. I think at some point we even sort of misled the regulator and ended up with a serious fraud office in, probably much through sort of lack of competence rather than sort of any sort of Machiavellian plan to do anything. Essentially ended up hating Sunday because I knew that Monday would happen, and I'd spend the next 5 days talking about poo. I then achieved nothing for the rest of the week alongside the 50 people in my department. And I would then fail to collaborate with, quite frankly, what I had was an amazing supply chain of really ambitious, growing, exciting companies doing cool stuff. The company entirely got in the way of that. So that was very frustrating. So that I then left and was rescued and went into a PE-backed business for the first time, which at the time was Punch and Spirit, so pubs. And I saw what could happen with a bit of ambition. I then went into a boutique procurement consultancy where we did some kind of interesting stuff. And then I moved back into industry, was procurement director at Miller Group under GSO Blackstone. And 6 years ago, I started Insider Pro. And since then, really helped a whole range of companies sort of really do 2 things: get everybody super focused on the EV equation and the key things that really matter, and then help them orchestrate and collaborate with that supply chain to make stuff happen, I guess. So a couple of the companies we've worked with that are quite different, I've shared there. So I think I could say all of those are successful businesses. Some of them super successful and super disruptive, and an Airbnb has gone on to be super huge, internationally important company. I'd love to share more with you. Sadly, the nature of what we do, I'm sort of bound by some of the confidentiality. But in the examples today, I'll share real life what's happened, just without the names, so you can see the sort of impact of it. I think, having met with all those companies and worked with them, a lot of businesses create strategy at sort of an exec level. Some of them set annual objectives, and then the functions kind of respond to those plans. But quite frankly, an awful lot of companies just kind of get on with it. They set a broad direction, and then the functions just get on with doing the do. The underlying case for their enterprise value kind of stacks up. That's why they exist. It's pretty decent. They probably don't talk about it in those terms, but it all sort of hangs together. So when you do your management away day and you've gone to wherever you've gone to, you know, hopefully a beautiful island in the Pacific, more likely Centre Parks in Nottingham. But even when people have done that, we tend to find that organizations' thinking is relatively siloed, especially where the supply chain is concerned. So decisions over kind of what we should be doing and what the supply chain should be doing are never really considered. Or if they are, it's super infrequent, which in a world where everything is changing at an enormous rate is kind of strange, really. And it's kind of no wonder that established players get disrupted pretty quickly and easily, and new startups, as we talked about Airbnb earlier, gobble up the market share with apparent ease, because organizations kind of don't get into this sort of stuff. Over time, you basically see people in the functions, so in IT, in operations, in sales, in HR, in marketing, getting on with the stuff that kind of interests them, rather than thinking about what am I doing today and how does that link back to our enterprise value and the growth of our business. You know, I hate to malign IT directors, but I've seen time and time again, IT and other functional directors buying software because it's the next cool thing, because they want it on their CV, because it's kind of interesting. Marketing teams, you know, very, very similar. In operations, I've seen people pushing for more staff because they just want to have a bigger team, because that's what's really important to them. And that kind of question of, is this the right thing to do? And is it really going to help us? Is sort of missing. And you sort of see on the right-hand side of that what happens. So you end up with a sort of divergence of the strategy and the thinking, which was creating enterprise value, and then all the stuff that the teams kind of want to do themselves. So you end up with slightly different functional goals, different priorities, and they're starting to move and shift with a bit of the politics organization, often really big gaps in skills and experience. People kind of get busy with the day-to-day. I've not got time for that. It doesn't matter. I've got other stuff to do. The progress, kind of really hard to understand it. Certainly from the CFOs I talk to all the time, talk about, I just can't get a sense of the organization. I was with the CFO yesterday and said, I know what to do. I just can't see that we're getting it done. And ultimately what that means is inconsistent results. And I know, as I've got a sort of a financial audience here, you know that inconsistent results is the enemy of company value. You know, more sales at lower margin isn't necessarily a good thing, or more doing at lower returns isn't great. So when we work with companies, we do this thing called the bridge, and this is what we call the bridge diagram, and we create this space for the critical conversations to happen, which basically understanding the EV model for the company and what it really means. So kind of what creates value, working out the range of possibilities, how we should optimizing it, and then supporting companies to actually make it happen on the ground, because talk's cheap and doing is the bit that really creates the value. So some of those decisions are very brave, and we support companies right through that. Here's the interesting thing. We started doing this because some of our PE-backed customers were really quite focused on EV. And they wanted just better returns. They kind of got it. It was the conversations they were having. What we then found was a natural outcome of that process was they would throw off cash. And over time, we've optimized that process, and it's just gone faster and faster and faster. And I'll share with you a couple of the tools a little bit later on that will really sort of help you understand what you could do to do the same sort of thing. For some of them, it's dead simple stuff. It's a fresh look at supplier terms. You know, it's renegotiating the contracts that you've got. Some of them getting, you know, big hits to cash from just almost zero implementation, just by having the right conversations in an informed way at the right time. For others, it's fundamental changes to the way that they operate. Some of those are hard and difficult, but they also have great reward. They help those companies become leaders in their industry or firm up a position and kind of keep out the competition. And you know, that's particularly the case in the last few years with the sort of growth in startups and their ability to disrupt what we're doing. I think for all of them, though, it's really reconnecting the functions back to the business's EV proposition. So what creates value and what am I doing today that makes a difference, and filtering out the noise. And I guess, how does it feel? It probably feels like the organization starts to think and act as if they're business owners as opposed to functional leaders, and that's the kind of change that you sort of see culturally. When you work out with who you should be collaborating with, the business grows, and when the business grows and it does it in the right way, it throws off considerable cash. Right. Here's something else that we found with all those 100 companies. And I have to say, this surprised me, but it's very, very true of almost every organization that we work with. Outside finance, no one knows what enterprise value is. Not really. So we asked people, what is enterprise value? And we got loads of answers. I put a few on here, and these are the kind of classic ones that you see. It's share price, it's some financial thing that I've learned about on a course. And we know that that's not really the source of enterprise value. Enterprise value, it really comes back down to the organization's ability to grow its cash flow and to do that very, very effectively and consistently, and can keep growing revenue. And if it can do that, that organization is worth more. The crucial bit of this, I'm not expecting everyone to become a sort of finance director or hugely financially literate in the business, although that is very helpful, is people can't connect what they can do today, this week and this month. That really matters. Essentially, if investors in businesses, expect operational engineering for the management team, and they do, and that's why we specialize in it. Many leaders in the business, in the functions, can't understand what they need to do to actually make a difference. So they kind of go after the cool stuff, the stuff that interests them, or the stuff that, quite frankly, they think just looks good optically. That fundamental step in thinking is sort of rarely there.
Great. Just before we go on to the next slide, Jeremy, we've got a poll for everyone, which will just give an idea of everyone's thought processes, given their roles, and also given current context, etc. So hopefully, business concerns poll will appear on your screen now. So please do vote. So as leaders and finance professionals, what do you worry about most? Is it competitors? Is it controls processes? Is it finance and banking? Is it regulatory compliance, or data and insight? Hit your buttons now. Feel like a game show host. Data and insight getting some love there. Right. There we go. Let's have a look and see if we can. There we go. There's the results. So data and insight was 67% on that. So what's your thinking from the results there, Jeremy? How does that tie into your experience, and obviously next slide as well?
Yeah, absolutely. I think every business we work with kind of gives us the same feedback, and say if I knew what was going on, I'd make better decisions, and I'd have a much better sense of it. We work with a lot of businesses to give them that stuff at their fingertips. The technology's there. I'll talk a little bit later about some of the tech that exists out there that we've used with customers that have made a really big difference. I think there's also a sort of human aspect to this as well, which is if you can see the progress every day, that's really rewarding and links back into the people feeling like they can make an impact, and that question of what can I do this day, this week, this month to really make a difference. Because thankfully, the vast majority of people come to work to do a good job and to have an impact and to make a difference. They buy into what the company's about. And if they can see that they aren't just treading water, a bit like my sort of Severn Trent experience, you energize them, and that's where the magic starts to happen. So absolutely, I would concur with that, certainly thematically, but also sort of logically and emotionally from my experience. Cool.
Brilliant.
Right. And I think, some of the things you just brought up on there, you see them here in this kind of what we call the finance wheel of worries. I'm really glad I don't work in finance operationally. Not only is many of the technical aspects far beyond my experience, But you've got an awful lot to think about. I often think about finance as being the governance and the stewardship of the business. As we've said, the data and insight one is the one that absolutely leaps off the table, and for me, I think is probably the most important. Some of those others are super important as well, though, and I think that's an awful lot to juggle. So when you're managing all of those sorts of things, it's very, very easy, I think, to not quite get to some of the big opportunities. There's a lot of containment activity, particularly in controls and process, risk management, etc. A lot of hard yards in data and insight, and we said that's probably our most important. That some of the other stuff just doesn't quite happen. And I think some of the tools I'll share today, I think will really help kind of get you engaging with the rest of the business so that they can carry some of that load for you. And you guys, I'm not saying it'll be an easier life, but what I'm saying is I think you'll use some of your time a little bit more effectively. That's certainly the feedback that we've had from our customers. So given that people don't really get what enterprise value is about, and I'm telling you that you need to focus your business on enterprise value, and then it will result in cash, we encourage our customers, and we do this a lot, teaching the principle of multiplication, not addition, getting under the skin of what the enterprise value equation is. Now, I know if you go online, you can come up with like 10 different ways of calculating this, all very financial orientated. We use this kind of very, very simple model, which is great for non-financial people, which of course will be the majority of people in your business who we're talking about here. So, broadly, it looks to EBITDA and the multiple. So, what can I do, again, today, this week, this month to increase revenue? We've made some suggestions there that, it'd be great if we could just put prices up. Most of us not, unfortunately, in that position. Maybe we can drive a better mix. Maybe we can improve our CX for people. Maybe we can digitalize a whole bunch of stuff that we can do. Reduce costs, of course. You talked earlier, Damon, about cost containment and that being sort of the tin hat attitude. Absolutely on the table. We do this all the time. We do a lot of supply chain re-engineering. We do some really interesting stuff around disruptive procurement and really thinking about it differently and asking the question, should we be making this? Should we be doing this activity? Is it better done by our supply chain? But then also thinking about taking the risk out. So a little bit back to that kind of wheels of worry and some of the stuff that was on there, and competitors thinking about how do we become super consistent in our execution? So not only do we have, a good margin, but how do we make sure that just continues unabated and we don't have that sort of up and down that erodes value? How do we block our competitors from the market? You can do that in supply chain. We certainly do that in some of the disruptive procurement activity that we do. How do we own that supply chain and make sure it works for us and not for our competition? And how do we sort of get our heads around risk management? I had a conversation yesterday on Brexit, of all things, which is looming very quickly in the background. And the financial controller I spoke to said, what more thinking do we need to do about Brexit? And I said, how long is your lead time on your products? They said, probably about 3 months. I said, great. Well, you've got about 3 weeks. Because the decisions that you need to have made, you probably need to have made them by now. So they're in a kind of a seriously challenging situation now. And those risks will continue to come and hit us, as I think the pandemic has really shown us.
Yeah, absolutely. A quick question from my total noob layman's point of view, Jeremy. I think the standard response with businesses will probably just be, looking at the supply chain re-engineering, they'll just be to demand lower costs, lower prices from their supply chain. But you also mentioned back when you were talking about your 7 Trent days, you had a business there which was pretty stagnant. No offense to anyone who worked there, apologies. But had a fantastic supply chain. How do you manage that? And without obviously going into the nuances of it, but still engaging your supply chain so that they really want to partner with you and help you in this?
There's a few things. I mean, the first thing I would say is don't be shy. And if you've got a large choice of suppliers and you can easily change internally, it's not too much hassle for you. You need to think about some promiscuity. I think that's right. I think you should challenge that. I think leaving things not properly explored and not checking the market price of stuff and are we getting a good deal and does it make sense and are we handling it the right way is the wrong thing to do. So get on with that, do that. That will generate some opportunity. Unfortunately, that's not often the case. One or two things kind of gets in the way. Either the market gets in the way, i.e. there's not that many suppliers to choose from, or the internal organization gets in the way and it gets a lot harder. And then I think you're back into rethinking the sort of process and approach and taking a broader view and back into that sort of, okay, so what question are we trying to answer and how do we solve it? For many of our customers, that ends up in, different make-buy decisions, it ends up in operating differently with our customers. So there's a whole bunch of choices out there, but it really comes from understanding how much supply choice have we got, how capable are we as an organization of making change internally, and then using that to generate a plan. Everyone I speak to, I think I can say this with some confidence, certainly every finance director I've spoken to genuinely underestimates the scale of the opportunity, and usually quite considerably. So quite one of the conversations I often have with people is, so what will the opportunity be? And I say, what would be a great result? And they say, I don't know. And we say, fine. And we've looked at it and we think you could find £5 million worth of cash this year. And in their minds, you can see them going, yeah, sure, it'll be half of that. And I'll say it's time and time again, they're about half right. Most of the time, they seriously underestimate it, largely because I think the steps that they need to take and the management team need to take to either unlock the market or the internal things are not actually that difficult, but they do need some focused effort. And that comes back to when everybody in the business understands this EV equation, and this is teachable to a sales director or a marketing director. I've done it and it works. What you see is a real change. Some of those barriers sort of just melt away and we get back into, you really can generate real value from that supply chain. Hopefully that answers your question, Damien.
Yeah, awesome. That's great. That's great. I've got a couple more questions for later as well to keep things off, so get ready.
And as I said, look, opportunities everywhere, these types of businesses. This is a manufacturer that we work with, 200 million pounds. It's highly skeptical whether they could do any better. And you can see it sort of moves by quarters, Q1, Q2, Q3. So they sort of 90-day blocks. For these guys, we found, 7.5, knocking on the door of £8 million worth of opportunity for them. It kind of came in two lumps. And for them, it was really about looking at expense line, some pretty basic stuff on indirect spend, reviewing what price are we paying, what does it look like, how can we improve, very, very simple stuff, very undisruptive to the business and generates value super quickly. So that was kind of, I think, pretty much our Q1 activity with those guys. And then we got into the COGS, and we got into the COGS really because we went back to that equation on sort of EV and really started talking to them about this. And rather than saying, how do we get a cheaper thing? We say, well, okay, can we grow revenue here? Do we need to spend more on some of the products so that our customers actually have a better product and they buy more of it? Where can we spend less? Where can we reduce those costs? And it's pulling multiple levers at the same time that makes a difference. And that really came out of having those good quality conversations with the management team and then holding the management team to account and supporting them to get that done. So it certainly doesn't require sort of my capabilities to do it or my team's capabilities. That can be done by anybody. Just that process of having those conversations and refocusing that on EV really, really makes quite a big difference. Also, we moved supply chain. We took stuff from the Far East and we bought it in the UK, and we were, I suppose, not surprised, but did find that that stuff's not always cheaper in China. There's a conversation I have time and time again. Why are we going thousands and thousands of miles away to produce this product? The pandemic's highlighted real resilience issues with a lot of supply chains, and it's essential that we start to think about where is the right place to buy stuff and why, and map our entire supply chain. Because whilst you might be buying it from somebody in the UK, if it's been made in a Chinese factory and you have issues with Brexit, tariffs, availability of cargo ships. I spoke to a company 2 days ago who just couldn't get their stuff in containers on time, and now their major products, probably 80% of their revenue, is out of stock. Go on their website, it's all out of stock. They can't get it. They've got customers, but they just can't service them. And then on the multiple side, they had some quite big things which talked to that they would be a risk if they tried to refinance or sell. So we were able to help them re-engineer that and really give them choice. Again, another sort of another opportunity in a slightly different business. So online, entirely online. For these guys, revenue is the real thing here. Revenue and multiple, a bit of expenses, but this was about, can we improve our customers' experience and use the supply chain to do it? So they were moving stuff around the country, as you might imagine, and it was all about driving up product availability, improving the marketing return on investment. You talked about tin hats earlier, Damien, and spending less. I'm all for spending less in the right places, but on marketing, it was about upping our ROI. So for those people, it was more about shifting out of PPC, so pay-per-click and sort of online, and actually back into some more traditional forms of marketing, which in the right mix really accelerated and helped them. And that's for digital business, which is kind of crazy. Improving the customer experience, speeding up how that operates, so the cash conversion cycle is faster. You're getting that cash flow out quicker. These are very, very measurable things and very doable, right through to making the right investments in capital. I think so many people, when they're investing in capital, don't really understand how to optimize that and drive that productivity. But when you're going through that EV equation, I think most of the answers for most businesses are pretty obvious, and they're things that they can do. Healthcare, I share this one largely because this happened in COVID. So coronavirus has often, for a lot of businesses, become an excuse to not do stuff. But these guys added £2.5 million to EBITDA straight away in the middle of COVID. They took the opportunity and they acted. And it was the same sort of stuff: COGS reduction, increasing revenue, taking expense out. They ended up outsourcing some of the stuff they did, but it just was real money taken out of the business, and it was absolutely doable during COVID. One could argue a little bit of the sort of lack of customer pressure really helped them there, because they could actually focus their time on driving that change, and they had the space and time for the conversations about what should we do and how does it work. So I hope you can see some clear opportunities now. If you in almost any sort of business and at any sort of time, it's definitely doable. These are some case studies. We'll send the pack out, I think, and you can read these at your leisure, but I'll give you a sort of taste of it. Opportunities genuinely everywhere. If you're spending money on CapEx and you're pumping that out, these guys were spending £5 million CapEx a year. The way that they were doing it was not optimal. We ended up with an IFRS 16 impact here. They looked at it differently, and it freed up millions of pounds worth of cash very, very quickly. £4 million here, easily doable and achievable within 90 days. And by doing some fairly straightforward and obvious things, but we shifted the conversation. So the operators weren't talking about how cool is this piece of capital and I like this asset that I'm going to buy, and it's all about the features of the asset. It was about, what does it do to its cash flow and what is its role in our business? And that's the shift that makes a lot of difference. And even basic steps like asking people to write down what they want and to codify that and test it and be specific about it made the difference. And you can sort of see the basic process we went through. We talked about EV at the start. We got to the core of the problem. We engaged the market to design the solution, not just talked in a sort of echo chamber internally. And then we optimized what that looked like in our business. And it was different for that company that it would be for others. But the process remains the same. Same in marketing. We talked about that return on ROI, 4-to-1, 7-to-1. That's a big return. I meet lots of CFOs who don't get a return out of marketing, who feel like they're wasting money and don't understand it. I met one guy a few weeks back who's been in with his company as CFO for 6 years and said, do you know what? I don't really understand the link. I don't understand what we do in marketing and how that delivers me more cash. I just know I've got to do it. So challenging that process and informing that conversation really helps, because on the marketing side, the marketing director is going, I don't really understand cash flow and I don't really understand EV. And when we put those two things together, you see that sort of a shift. For these guys, we started auditing. That was a really big thing. It was like, let's prove these numbers that we're talking about. And interesting, in the poll, it comes out as data and insight, the things that matter. For these guys who are doing the wrong stuff internally, they outsourced some of their stuff sort of accidentally. And when we took a sort of a broader view of that, everyone went, hey, we could do different stuff today that would have a much better impact on our cash flow, a much better impact on our EV and, you know, on our future as an organization. This one I kind of love. We see it in every business, an increasing spend on IT. You know, whether you see it very obviously on the line that says IT or whether it's embedded within the functions, people are out there spending cash right now on IT in all sorts of different businesses, large and small, and they're baking it into their organizations. There's a reason, if you've ever watched Selling Sunset and you've seen the lovely houses that people are buying in LA for large sums of money, and all of them seem to be software people. They're making very good money. One of the ways they're doing it is the way that they sell the software and the licensing rights. We've had organizations such as this one that had baked in a £600,000 risk because the terms of their license said, if you download it, you bought it. And you bought it for 5 years. And some guy in IT had downloaded it to every laptop in the company every single time he set one up. And no one knew. The supplier had a right of audit, and they wanted to change their system. It was an ERP system. And that meant that they were going to have to pay that bill. So when we sort of put those processes together, we started to out some of these really, really big risks, which, you know, I certainly wouldn't want in my business, that sort of piece hitting me. And what I suppose what we learned from that was, actually, when we engaged with IT, they kind of got that and they understood it. And as we challenged them, they started to grow in their confidence for making improvement. Again, when they really understood what we were trying to achieve and kind of how it all stacked together, which previously they just didn't. They just got on with doing stuff that kind of looked cool. Back to kind of things that you can do. I mean, I think I would say, you know, there are 4 things that you need to do right now that will result in improved cash flow. And we have seen this time and time and time again, that you can get to £1 million plus in 90 days, you know, in certainly a lot of mid-cap businesses. Number 1, go out there and have that conversation with your team around enterprise value. I know there's an awful lot of stuff you guys have got to think about, but it is worth investing time on teaching the principles and starting to align what the guys are doing day to day back to that plan. I've got a cool tool I'll show you in a second what that looks like, of how you can do it. And it's dead simple. You could do it tomorrow. Sharing data. Again, I love the data insight came up as the most important thing. Completely agree. We would recommend sharing critical data with all employees. Not everyone's comfortable with this, but we certainly push for this, or at least as many of the key employees as possible, and suppliers every week. Let people see the difference that they're making. Let people understand how they can see the improvement. We have in our office a big TV that pumps out when we're here, not so much now, we now have to do it online, that pumps out our results every single day. Our customers that perform the best, that generate the most cash flow, do that activity. They share that data and reporting widely, and they connect what people can do in the business with those indicators and those functions for success. The really smart companies do it with their suppliers. You know, they engage those suppliers by showing them that if they get it right today, their customer grows, and that's good for everybody, and that's rewarding too. You know, who comes to work to let the customers down? You know, very, very few people, I hope, and I certainly hope that's your experience too. I think the other piece comes back to challenge as well. You know, we also have the opportunity, once we have the data, to start challenging people, so employees and suppliers, to move the numbers that impact EV. And again, that's where the cash flow starts to happen. So it's connecting the real stuff on the ground and asking the question, what's getting in your way? What's causing the problem? Because 9 times out of 10, the things that are getting in the way and are causing the issues are things that are eminently solvable. And they're certainly solvable by getting the management team around the table and facilitating that EV conversation. So, you know, we've done this with suppliers all the time. We said, we need you to help us move this number. We need you to help move our speed to serving a customer. It's currently 5 days. We need to get to 3. And sometimes people just say, yeah, no problem. You should have asked. We've been doing that for your competitors for 3 years. And we go, oh, well, we assumed that you couldn't do it. And you sort of go, and you wonder why you didn't do it 2 years ago. And you really improve, really improve your customer's experience. And that can have some very, very quick and direct effects on revenue. It's surprising how few times those very simple questions are not asked if you don't make time to facilitate that conversation. And the last bit on incentivize is really about creating wins for growing enterprise value. Now, I'm not going to sit here and say, therefore, you should write checks to everybody and give them all big bonuses. I actually think bonuses are not a great tool for getting people to do the right stuff, and can be quite divisive. There's an economist called Goodhart, if you're aware of him, but Goodhart's law states that as soon as you set a measure as a target, everybody basically gains the target. So, for example, if you do customer complaints, then what tends to happen is organizations start to define what counts as a customer complaint as different rather than addressing the underlying cause. Not to make it a political point at all, but one might accuse the government of doing that during the pandemic as what counts as a COVID death. That would be a very, very good example of Goodhart's law, and that happens in businesses. So my message to you is think about how you can create wins for people. It might just be recognition. That's one of the strongest motivators that there is. And also think about where you create disincentives and removing them. So, for example, hey, you saved a ton of money, so I'm going to give you a smaller budget next year, would be a good example of something that kind of works against us and needs to be rethought. But those things are quite often individual to how you operate your business. But I definitely ask you to think about those 4 foundational habits, because when you have those in your business, you get that extra cash, and you get that extra cash quickly. In terms of the process and the cadence of doing this, it's fairly straightforward, as I've said. So, go out, spend some time virtually, probably at the moment, with your exec team, and get under the skin of your EV principles as a management team, and so everybody understands it, and get that agreed in writing. It's a simple process to do. Happy to chat to any of you about how you practically do that. It's a very simple process. It's well understood. Map that out on a document. We've got a document that we'll show you in a sec, which we'll send out, that shows you how to do it. It's dead simple. It's in Word. It's got like 5 columns, and anyone can do it. Set visible targets and KPIs against that plan. Report the progress visually. We built an internal reporting tool called Inside Track. With the help of Will Buggy, do that. We now forecast our P&L, our balance sheet, and our theoretical MOI if we were refinancing or selling every week, and every employee sees that. That's been amazing in turning our performance around internally, but also in our customers. We've seen a really, really big shift on that. Push people. Now is the time to push people. Internal functions can do an awful lot more than we give them credit for if we create that right environment. So, I think the job from a finance perspective becomes supporting and guiding decision making as much as anything. When they've got visibility of the numbers and where and how it makes a difference, we can transfer some of that accountability. And I think as finance people, we can reduce some of the load on our shoulders and ask some of the rest of the team to carry that weight. And it's rewarding for them at the end of the day, because they're coming to work and they're making a difference, and it doesn't have to be, as I've said, a sort of individual bonus type of arrangement. It can just be that I can see how my contribution really matters. This is a mapping tool, dead simple. Take this away, go and do it. In the first column, write down the function, division of the team, then be super specific about what they're going to do. And then ask the question, how does this increase enterprise value? It can only really be one of 3 things. Has it increased revenue? Has it reduced costs? Or how does it improve our multiple? Get the name of the person written down. Don't write the name of the department. Don't write marketing. Write Brian from, who is the head of marketing. Get an individual's name on that. That has enormous power in getting people accountable and making them feel like they own it, and reducing that kind of wheel of worries that finance inevitably has on its shoulders. Set leading KPIs as much as you can, and be as frequent as you practically can about it. Some of those KPIs should be weekly. I often see things that are quarterly and monthly and no one ever looks at them. They never make a difference. But the more specific you can get and the more time-based you can get around those, the better. And then reconnect it back to that EV equation with numbers. So let's see, how does it impact the balance sheet? How does it impact the P&L? What does it do to net assets? What does it do to gross margin? What does it do to key industry optics? I promise you will have to educate some of your team on what some of those terms mean, but it's an incredibly powerful thing, because it really, really helps those individuals really understand what they're doing and how that maps back to the business. This is our copy of Inside Track and the software that we use internally. You'll use your own software. There's a whole host of options and choices out there. Ours works for us, but I'm sure there are other things that you can use. We have our cash flow, our P&L, our balance sheet forecasted by the team based on their activities every single week. Now, I'm not saying weekly is right for everybody, but for us, this is what we do in our business. And we have accelerated our cash flow time and time again. We are now operating, far ahead of our competitors, and certainly what was true legacy-wise in our industry by doing this in my business. Our customers, when they do this, it makes a big difference. It can be a tough thing to do because some people are uncomfortable sharing some of these numbers. So, make the group smaller, but the more people you include on that and feel comfortable including on that, the better it will be. You'll certainly up the level of financial literacy in your organization, and you will see that pump out additional cash. Something I call agile accounting, a very risky term for me to use here, because what I actually mean by that is having really good project management in place and having the count bit of accounting in. So I don't mean financial accounting. I don't mean all the sort of technical stuff. What I mean is have a clear plan, set that out, and review it regularly. We use an agile project management approach to do it. We use a piece of software called Jira, which is freely available, dead cheap. I thoroughly recommend you look into doing that, and use that to challenge, incentivize, and hold people to account for what they want to do and what they need to do to grow EV and therefore throw off more cash. That would be specific to your firm about how you want to do it. And there's probably a whole session in itself around how you do this. And I'd be happy to chat to anyone about how you do it and what it means. But the process of reviewing on a 2-weekly basis what you're doing and then reconnecting and saying, how does that connect back into enterprise value, reconnects the organization with its cash flow and with its, with make sure that everyone's doing the right sort of stuff. So I think in summary, and hopefully conscious a little bit of time, Damien, on having time for questions, if you feel like me that that your organization has an ambition gap, or you feel that there's opportunity out there, go out and educate your team on EV, on what it means, and do it in a way that they can understand it. And we found that equation there, which you can use, no problems at all. It has been great in helping people understand what they can do to make a difference. When you map out all the stuff that everyone's doing and the key priorities for the organization in that form, you spot the gaps, you see the opportunities, and you help people understand where they can make an improvement. They then ask the broader questions about how can we collaborate better? How can we be disruptive? How can we do things differently to deliver measurable positive results rather than inconsistent results? And when you go through that process and you bed that into the way that you operate, we found time and time again that organizations throw off value, and it's very, very typical for the businesses that we work with and people who follow this sort of process to throw off £1 million within 90 days. So I hope, Damien and guys, thank you for attending. I hope that gives you my whistle-stop tour of how to get to £1 million in 90 days.
Absolutely fantastic, Jeremy. Thank you so much for all of that insight and real-world examples, etc. I know there's obviously NDAs, etc., built around some of the work that you do. Great to get a couple of questions in the Q&A box. Please, guys, think about some questions you want answering. I'm going to throw one out to begin with in terms of you mentioned you worked with a vast array of organisations, both SME all the way through to your large corporate, multiple billion turnover, etc. Is there a common theme in terms of the biggest blocker that you see in those businesses, whether it be a cultural issue or a resistance to change issue, or maybe the individuals that you're dealing with just aren't self-aware enough, potentially, or they're not able to do enough navel gazing from a business perspective to actually get things moving? Is there anything that you've seen as a common theme?
I think you're right by saying that the biggest block is people. They get in the way a lot of the time, and it often comes down to just a lack of understanding. I almost want to say maybe sort of ego to a degree, but But with a lot of people, it's if you can make the time to sit them down and explain how it works, you kind of get those moments of clarity.
Mm.
If you make it simple enough, people quite naturally come to, yeah, okay, I can see I understand how that works. You know, they've got the best interest of the company at heart. They know they're probably quite passionate about what they do and coming to work. And that starts to unblock quite quickly. So it's really a sort of leadership question, one of taking the time to get them genned up on, you know, how the organization works, what the finances does. I mean, with one or two customers, we've even played a game of Monopoly, effectively, moving the cash through the P&L and the balance sheet with senior people to help them understand, you know, how cash is generated and what happens. And what's fascinating is how quickly that turns around their thinking. So when they come back to do the operational planning, they ask different questions.
Yeah, fantastic. But just go to the Q&A. Greg Morale, should ever businesses have an opportunity director, which is a director without portfolio to maximize on these opportunities?
I love that idea. I think that's fantastic. I've never heard that before, but yeah, if I could steal that, I thank you, Greg. Yeah, absolutely. I think what it needs is not necessarily an individual, but I think it needs somebody with that sort of mindset. So the opportunities for most organizations are absolutely there and in plain sight. We found businesses suddenly moving into new markets when they wiped away some of the old school thinking that was there. You know, some people thought that you know, we make this item for £10, we sell it for 12, and you can't make it for anything really much less than 10. And then we said, are you sure about that? Actually, you know, you go back through that process, you can make it for 6, and all of a sudden, not only do you make more profit in your current market, but you can sell it in the United States. You know, and that's a huge market. So yeah, absolutely. I'm Greg, with your permission, I'd like to suggest that to one or two people. I think that's fab.
Fantastic. Phil Spencer's had to drop off because he's got a hard stop at 12. Thanks ever so much for coming along, Phil. Michael Buttery, a long-standing contact of mine, asks, do you see companies that run a valuation model of the business perform better on these things? Michael says he's worked in a company previously, their stretch target and measured a view of value business, and it really drove action there.
Fab. Yeah, but we don't see many people that do that, in short. I think I lost you for part of the question now in connection, but yeah, we don't see many people that do it. I would say it'd be a couple that I've seen do that, but yeah, I can absolutely see that. If you are doing that on a regular basis and sharing that so that people genuinely understand it, yeah, you'd be finding what we're finding, which is when you focus on that EV equation, it has magical results. And the first and foremost, the big one that it hits early is cash.
Yeah, fantastic. And a question from David Natoff. Any thoughts on how we can get procurement to not solely focus on cost, but start focusing on value?
Yes, lots. Procurement, I think, is taught that it's all about cost, and it's all about cost because it doesn't really understand the value of the business. So I think it comes down to education. It comes down to giving procurement, I think, a slightly broader remit. If you ask it only to say, look, you know, we've decided to buy widgets from one of these 3 suppliers, get the best deal. I think if that's the question we ask procurement, we can't really give them a hard time for just focusing on cost. We've got to pull them up and ask them to be more strategic and say, okay, what we need to do is produce this product or produce this service. How best do we organize ourselves to do that? And I think that brings them closer to the operational decision making. You know, many years ago, we used to talk about, you know, operations and supply chain a lot. And then we started talking about operations and supply chain or procurement as being a separate thing. And I think that's probably driven the wrong conversations. It's almost decoupled procurement from it. And I think you end up in that sort of cost only matters sort of side of the world. The other thing that's obvious that everyone should be doing is measuring the right things and measuring value, you know, and saying, you know, because at the end of the day, we saw this, you know, with the NHS during the pandemic, etc. If you haven't got the PPE, it doesn't matter how cheap it is. You know, you've got to deliver on that first, and it's stacking up those objectives. But yeah, I think it comes back to involving procurement earlier in the conversation. so they're taking a broader view. Otherwise, they can certainly get very tunnel vision, and we end up with all the wrong behaviour.
Fantastic, wonderful. I think no more questions in the Q&A unless anyone wants to type in very quickly. But just as a summary in terms of next steps, what I will do is I'll be contacting everyone who attended. Everyone will automatically get a copy of the recording of the webinar as well. But also, Jeremy, I know something that you spoke about. If people want to contact you and have a little bit of a one-to-one, you're very much open to that, aren't you?
Yeah, look, I love doing this because I find it fun, and it's what I enjoy doing professionally day to day. So I'm always open for those conversations. You know, no need for any commitment or anything else. I love kicking this stuff around, and I learn something new every single time that I speak to people and meet new people. So yeah, feel free to reach out. It'd be great to hear from you. I'd learn something from that conversation for sure, and if I can help you guys on your journey, that would be a pleasure.
Yeah, fantastic. Wonderful. Jeremy, thank you so much for your time. All of that information, that insight, that amazing experience. I think it sounded too good to be true in terms of that cash flow unlock, but it happens. You've got so many case studies and examples of where it can really work. And again, so pertinent in the current climate, and then building out that sort of business as usual, new normal, terrible phrase, for as we come out of the COVID piece. So thank you everyone for attending. Jeremy, great information again, and we shall wrap up there. Thanks ever so much again.
Thanks, Damien. Thank you.